that YouTube going. How's everyone doing? Welcome to Monday morning. Welcome to the only job in the world where you guys get excited that the weekend is over so that you can trade again. Um, Everyone else isn't that excited about coming to work. Hope you guys are doing well. Hope everybody had a great weekend. We'll give it a minute. I'm a couple minutes early. Good morning, Cav. Good to see you. Victor played hooky on Friday. He'll be in detention this week. Sorry. It happens. Good morning, Todd. Risky Meister, you made it back. Jim K, 10K. All the Ks. Good to see you guys here. Hope you guys are doing awesome. We're going to have fun this week, guys. I'm kind of excited about it. I hope you are too. News. Let's check news. Always check news, right? My lead into news today, guys. I'm gonna give you the link to forexfactory.com/calendar. This is my first stop every morning. For those of you that are newer with me, everything about trading is a pattern. It really is. It is a very distinct look that we have written rules for. So we're actually describing a pattern in the rules. And good morning, Mike M. And that description creates an edge. So when we talk about I'm looking for my rules to be met, what I'm saying is I'm looking for a pattern to develop. And when that pattern develops, it's time to enter the market. And when that pattern doesn't develop, it's okay to stay out of the market. One of the biggest things that can disrupt your pattern is news. So every morning I come to forexfactory.com and I'm just looking. Today's Monday the 11th at 10 a.m., guys. President Trump speaks. It's labeled as medium impact, but if you've been in the market for any amount of time, and it doesn't matter which president it is, don't make it oh, he's going to say something stupid or oh, he's going to say something brilliant. Every president that's ever spoken during market hours has created some sort of spike, guys. That's why they put that orange box there. So at 9:58, you might make the decision, I choose not to trade just in case the market spikes, because that spike can make the market unreadable. It can change directions. It can spike crazy and slip you out of a position. And once every 10 million times, it slips in the correct direction and gives you a huge winner. But my experience is the exact opposite. These red impact, high impact, those also can disrupt the market. So we're going to just talk a lot. And I wanted to start with the crude oil, guys. There are two platforms that we discuss in this room. The first one is NinjaTrader. NinjaTrader uses dynamic Renko bars. Each bar looks exactly the same. It's a matter of ticks rather than time. Good afternoon, Miss Jen. Hey, good morning, Mike M. and John as well. So this is going to have a different look. There's also TradingView, which some of you are trading TradingView. One is not better than the other. One is not an advantage over the other. One is not going to make you cooler in your social circles than the other. It's just different. So if you are one of my NinjaTrader users, guys, you have to look at your charts and you have to adhere to the plan for NinjaTrader. If you're one of my TradingView users, you can't try to trade minute bars like Renko bars, and conversely, you can't try to trade Renko bars like minute bars. So as we get moving in the day, and I say all this, we are going to talk about rules for both charts, guys. We're going to talk about advantages for both charts. We're going to talk about how you can recognize an edge on both charts. And that's really what our first hour is going to be. It's going to be just learning some rules. When is it okay to trade? It's okay to trade when the rules are met, because the rules describe a pattern. That pattern can be proven to win more than it loses, guys. I'm going to encourage everybody in the room, simulate your trades daily. As you learn this plan, practice this plan. And as you practice this plan, guys, post your trades in the room. Win, lose, or draw, post your trades in the room. And every time you post in the room, just tell me what you see. Did I see momentum? Was there anything in the way? How did I define my entry? And my promise to you is every time that you post in the room, you'll have a private session. You and I will look at your charts. We'll talk about the good, the bad, the ugly. We'll talk about things that you can do better, things that you did awesome, and any push in the right direction that you need, I'll give you right there in the moment. Um, and then simplify, guys. Keep it very, very simple. So one of the things that I'm going to do, and I'm going to drop them in the room right now. If you are my NinjaTrader users, this is the Nexgen tracking sheet for NinjaTrader that I just dropped in the room. And then also, this is what we call the KISS plan. And the KISS plan is designed to optimize your chances of success as a brand new user with NinjaTrader. And what it does is it gives you 2 trades, tells you where you define your rules, gives you a checklist for entry, and a way to manage. One of the biggest reasons new traders fail is because they trust their guts, their instincts. They don't have a plan, guys. I just gave you a plan in the room that is designed to optimize your chances of success on NinjaTrader. TradingView people, exact same thing. Here's your TradingView plan. That plan is going to tell you exactly how to read each chart, where entries come from, and checklists for entries. And then the spreadsheet that I'm going to give you is going to be your visual, your description. So there's everything in the room. So this morning is going to be about identifying advantages. This morning is going to be about defining entries. This morning is going to be about talking about management. But most importantly, this morning is going to be about giving you guys feedback as you learn to read your indicators. Because what you're going to find is that 90% of your days is reading indicators. And about 10% of your day is going to be actively trading. So I'm going to start on NinjaTrader as I do because I still have more people here on NinjaTrader than TradingView. And we're going to talk about what's called a high probability trend trade, guys. This is a trade where each rule on every chart agrees with the rules for the trade. Each indicator agrees with the rules for the trade. This is your first trade, guys. This is your foundation trade. This is your beginning trade. This is the trade that's going to teach you to read your indicators, that's going to have you recognizing advantages, and that's going to open the door for more trades. So I encourage you guys, this goes back to simplicity. Keep it simple. Keep it focused. Learn this one trade. Learn where the rules are met and how to identify them. And what you'll find is that the other trades present themselves. So each rule, when true, creates an advantage. Everything is about finding advantage, finding an edge, having a leg up on the market, I suppose is the way to say it. So when you have strong triggers on your 13-2 dynamic Renko chart, you will have the advantage of momentum. And momentum is hard to stop, and momentum pushes a market, and momentum can break key areas. And this first advantage is number one for a reason. And then you're going to make sure that there's no termination conditions, guys. We call termination conditions areas that could stop the market is the easiest way to say it. And when there's none present, you're going to have room to make money. And when you have room to make money, we're just going to call it a clear path. So momentum and clear path, guys, this is your core. These are the 2 advantages that are going to open every door for you. Once you have those, you're going to go define your entry. And your entry is going to be initially for a trend trade, and it's going to come from a smaller chart, and it's going to be a lower risk endeavor, and you're going to be able to pinpoint exactly where the market is most likely to continue with the trend. So those 3 rules are going to happen on 2 charts. And your large chart is a big slow chart, guys. And your large chart is going to define the direction of the market through the background color. It's going to define the momentum of the market through those strong triggers, rule number 1. And it's going to define if there's any areas in the way, any trouble, through rule number 2. And rules 1 and 2 must be met on the large chart before you go to a smaller, faster chart and refine your entry. This refinement chart is going to show the inner workings of 1 bar on the large chart. It's where you're going to pinpoint the best of the best spot for entry. It's going to allow you to reduce risk. It'll allow you to maximize profit potential. No matter which platform you're on, we use 2 charts for this reason right here, guys. The large chart, big chart, whether it's your 13-2, whether it's your 15-minute, these are the people that are in charge. These are the men and women with the money to move the market, the institutions, the algorithms, whatever you want to call them. It's the the group that meets in the meadows and controls everything, right? And they typically win. So if they say they want the market to go up, your path of least resistance is to go up with them. And if they say it's going up fast, you should ride that wave of momentum that they created. And if there's nothing in the way, then we'll go to the small chart. And this is the small crowd, and these are your fighters. And they create these little pushes down when everything says up, or they create little pushes up when everything says down. So guys, your large chart is the core of everything. And if the large chart doesn't say look for an entry, it's okay to not look for an entry. But once they do, you're going to go to that smaller, faster chart, and you're going to be able to refine where the trend is most likely to continue. You're going to be able to pinpoint it using areas and triggers. And guys, this is your recipe for success. When you go to TradingView, it's very similar. Your large chart will lead the way. Your small chart is nothing but an entry chart. But we're going to focus on NinjaTrader first. So let's talk about the NinjaTrader indicators, guys. And every one of these, with the exception of Fibonacci, are the exact same names and descriptions that you'll see on TradingView. So triggers show up in everything. Triggers are going to define momentum. Triggers are going to let you know if you're at a termination condition on your Renko charts. Triggers are going to help you pinpoint entries. So there are small triggers, 2 solid lines, and then there's large triggers, 2 dashed lines. On NinjaTrader, you're going to use these triggers. Rule number 1, strong trigger lines, is a direct result of these triggers. Rule number 2, no termination conditions. The triggers are going to tell you whether one's present. Rule number 3, pull back to an area inside the triggers, is going to use the large triggers to define entry. So just know these are small and these are large. You're also going to have areas. Areas are horizontal lines that run across the chart, guys. Don't overthink them. There is divergence, highs and lows, magenta and cyan lines that print off of a pivot. This lets you know there was a loss of momentum in the move up or the move down. These magenta and cyan lines behave as lines in the sand and have the ability to stop the market's forward progress. So they're going to work their way into termination conditions. Fibonacci resistance, that red line that runs across the chart, when the market is trending up, that's where it could bump its head. That's where the large crowd may choose to reverse the market. You're going to see it long before you get there. Fibonacci support has the same reaction in a downtrend. And then these yellow 1-to-1s, depending on trend, if the trend is up, they may behave as resistance. If the trend is down, they may behave as support. So these areas are going to come into a lot of what you do as well. These areas are going to be the areas that could behave as termination conditions, making sure that rule number 2 is met. And those areas on the smaller chart are going to create the same potential bounce, and that's how we're going to define entries. So you don't have to know what creates the areas. You don't have to rank them because they're all equally as important. Just know that when price reaches them, the large crowd's likely to make decisions. And when price reaches them on a small chart, that's where it may bounce to create an entry. So let's go through 3 rules real quick. And I want to get to the live market as quick as we can today. So if you have questions about anything that I say, please just raise your hand. I want this to be a discussion, guys. I want this to be you asking a million questions and me doing my best to answer each and every one of them. There's no reason to ever wonder why in this room. All you have to do is raise your hand and get that conversation going. So rule number 1, momentum. On the large chart, on your Renko charts, when the background is green, the market's going up. In order to have rule number 1 met, you must have small triggers green, large triggers green. Small triggers must break away from the large triggers, creating a gap between the two. And in a downtrend, the smalls are red, the large are red, and it's that space between the triggers that we're going to focus on. So strong triggers mean that the odds are favorable for the market to continue in the direction of the trend. You're going to see it odds favorable momentum a lot. Strong triggers are what we look for to break key Fibonacci areas. Strong triggers will even cover some mistakes that we tend to make as new users. If separation is strength, how's that for a phrase? When the small triggers work their way back inside of the large triggers, this is weakness. Anything can happen up or down, guys, and you'll never know what's going to happen. But this weakness says, hey, rule number 1's not met. Let's pump the brakes. Let's sit on our hands. Let's wait for the large crowd to take back over and really create a little zip. And guys, this is the easiest lesson that you will ever get. Strength is separation. And there's that separation right there. And you can see it breaking key areas. And now we're kind of in a strong trending market. Separation pushes down, separation pushes up. You had separation, little retracement, weakness right at the fib. Can you guys give me a Y in the room if you're good with that? We're just looking for space between triggers. That's going to define momentum. Space between triggers is going to let you know that that market's got some zip behind it. Once you have the zip, it's a technical term, right? Let's make sure there's nothing in the way that could screw up our good time. And those are the areas. Areas on the large chart, guys. Anytime you reach an area, you have to say to yourself, decisions might be made by that large crowd. Anytime you reach an area, that's where the market could bounce. That's where it could reverse. That's where it could break. And the reality is you never know what the reaction's going to be. You can't, nobody sends out an email or a fax and says, hey, guess what? When we get up to that Fibonacci resistance, the buyers are going to quit and the sellers are going to take over. So we're going to let the trigger lines tell us the story, guys. And do me a favor. It's not really doing me a favor. It's doing you a favor. Don't rank these. Don't say that this line is more important than that line, or that these dots are not quite as important as this line, guys. Every line on a large chart could stop the market. So when your price bars get there, when price moves up, reaches Fibonacci resistance, reaches a divergence high, reaches yellow one-to-ones, the only thing you have to do is say, where are my triggers, guys? And if both small, two lines of the small, and both lines of the large remain below resistance, resistance is more likely to stop the market's forward progress, to create a big untradeable bounce, than it is to just break. So every time you reach a line, it's going to be a termination condition for the moment. These are great places to take profits, guys. These are great places to pump the brakes and wait for the reaction. I like to encourage people, just assume it's going to stop the market. Instead of hoping it breaks, just say, man, we reach resistance. All of my triggers are below. Let me sit on my hands and do nothing just for a minute and see what the reaction is. Price comes down, hits Fibonacci support. 4 trigger lines remain above support. Ladies and gentlemen, there's no reason to lose money trading into termination conditions, and you're going to see it. Resistance, resistance, support, divergence, lows. I mean, everywhere, support, resistance. Guys, the easiest money that you'll ever make will be trading away from a Fibonacci area, trading to a Fibonacci area, rather than just trading directly into one of these areas on a large chart. So that's rule number 2, guys. Rule number 2 says make sure that there's nothing in the way. Make sure that you have a clear path. Trigger lines are going to tell the story. So I'm going to give the 4 potentials. When price reaches the area, in this case we're talking about these yellow one-to-ones, count your triggers. They're going to tell you everything you need to know. And if none of your triggers have broken through the area, see how it didn't right there? Just assume the market's going to take any money you try to put into it. Just assume the market's going to create a big ugly bounce the same way it did there, because 60 to 70% of the time it will. If 2 trigger lines, your small trigger lines, break through the area, guys, the area has the potential to break, but it's not our best look for a break. It's not the highest probability for a break. It's still pretty sketchy trying to take a long trade. When 3 triggers, 2 smalls and 1 large, get above that area, now we start getting excited about the potential to break. Now we start saying things like, whoa, I can't wait to look for an entry on my small chart, but let me make sure that it's perfect because my path still isn't clear. And guys, your path isn't clear until all 4 lines get above those yellow one-to-ones. Now the path is clear. The path will remain clear until you reach the next line. And once you reach the next line, guys, it's going to start all over again. So termination conditions, their sole purpose in life is to let you know where the market may bounce. 2 triggers through, not your best look. There's a reversal. 3 triggers through, it still didn't. I'm going to give you a plan to take that trade, manage it aggressively. 2 triggers through. We get caught at divergence lows, but look where the market reverses. Right from Fibonacci support, right from divergence lows. And sure enough, it just rockets to the upside. Pretty cool, right? You know about these areas before you ever reach these areas. So you can say, okay, with only 3 triggers through, it's just the potential. And guys, divergence is a loss of momentum. That divergence is going to keep you out of more problems when it's only the potential to break. But when it is momentum, when it is potential, when they haven't reached the next area, rule number 3 says that you're going to buy a pullback to an area inside of triggers. Do you guys see this pattern right here? Let me put a square around it. Inside of this one bar that has not quite reached Fibonacci resistance, that has strong triggers, and 2 triggers above resistance, it pulls right back to a midband, right inside of triggers, and continues up to bounce off of resistance. This is the entry pattern that we're going to talk about. And this entry pattern is consistent, guys. It is the same look every time. It's the same rules every time. So what we're going to do is we're going to first define it in words. Where's my pictures? Here we go. Your entry is so specific on your Renko charts that you're going to use a limit order, which means you're going to wait for the market to come to you, and you're going to use that limit order to buy or sell a pullback. And that pullback is the little fight by the small crowd, and you're going to buy or sell that pullback at areas, fibs, midbands, yellow 1-to-1s, because those can stop the market the exact same way that they did on the large chart. And you want those areas to be inside of triggers. And guys, this is where the magic happens. Your trigger lines are moving averages. That's all it is. Fast moving average, slow moving average. There's this amazing phenomenon, regression of the mean. Price returns to moving averages. So what you're going to do is you're going to say, okay, large chart says up, large chart has a clear path, large chart has momentum. I'm going to let the small chart fight and create a pullback, down bars against the large chart's up bars. And that pullback is most likely to retrace to the triggers, whether it's the large, which are smooth, see the momentum, the separation, or the synthetic, which are nothing more than the large chart, large triggers. When these 2 triggers ride piggyback, one on top of each other, they define the retracement zone, where these down bars are most likely to go. It's the areas inside of triggers, fibs, midbands, and yellow 1s, that are most likely to create the bounce to rocket that market in the direction of the trend. So the entry rules, be very specific with your language. If the large chart rules are met, on the small chart, I'll wait for a reversal bar. The reversal bar signals the beginning of the pullback. Once I get the reversal bar, I'll define where the retracement is most likely to go using large and synthetic triggers. Red box shows you where those down bars are most likely to happen. And then it's most likely to bounce off of a fib, a midband, or a yellow 1-to-1 inside of triggers. And guys, capitalize inside every time. So somewhere from the highest point of support to the lowest point of support is where this market is most likely to continue in the direction of the trend. You're going to activate a limit order a tick or 2 above that highest point of support inside of favorable large triggers. And guys, this becomes your entry for the highest probability trend trade. This is the one that reduces risk by waiting for the pullback. This is the one that increases profit potential because it gets you in furthest from the next line of trouble. And it's consistent, whether it is up or down. Reversal bar begins the pullback. Triggers define the retracement. Areas within triggers define the bounce. It's like throwing a tennis ball. I don't expect a tennis ball to bounce until it hits something solid. That's what the areas inside of triggers represent. Limit order goes a tick or 2 below the area. And here's the magical part about learning how to define entry when the large chart rules are met. By understanding where the market is most likely to continue, areas inside of triggers, you have, on accident perhaps, defined where the market shouldn't go if this trade is going to be one of those winners. And I'm going to remind you, the highest probability trend trade, the trade that we just talked about, is a trade that typically wins 70 to 80% of the time, which means 20 to 30% of the time, guys, you are going to get absolutely steamrolled. It's the cost of doing business. Because of how specific and accurate the entry for the trend trade is, you can say, I'm going to put my initial stop 4 to 5 ticks beyond the triggers, beyond the retracement zone, beyond the areas likely to create a bounce. And if the market is capable of breaking through everything that should continue its progress down, I will take a loser. I accept that loser as a cost of doing business, but it's only 4 or 5 ticks beyond the triggers. 4 or 5 ticks beyond the triggers. And we call this where the market should not go. And guys, everything that you need on the large chart happens in the first bar. So on this first bar, can you see the momentum? Smalls below the large, space between. Give me a Y if you see it, guys. That's rule number 1 being met right in front of you on the most current bar. Once I have momentum, I got to say, well, is there anything in the way to create problems? We are 1 tick off of Fibonacci support, but we do have 3 triggers through the fib above us. So we're looking at this, we're saying I don't have a clear path, and I'm real close to trouble. And guys, when you don't have a clear path, one of your advantages are gone. And you're going to start talking to yourself in terms of these advantages. And I missed my picture here. I thought I had it up. So I have momentum, but my path isn't clear, which means that I've only got 2 out of 3, assuming I have an entry. Now it's a medium probability trade. Now I have to latch on to those other advantages. And guys, if momentum is the first advantage and the path isn't clear, divergence is a loss of momentum. I'm starting to sacrifice momentum as well. And in the plan that I give you, it's going to tell you if it's only the potential to break, we call it 50-50, make sure there's no divergence on that small chart, because that is the number 1 killer of potential to break trades. So a lot of you are just going to sit on your hands and wait and see what happens and wait for a better opportunity. 90% of your day is spent reading indicators. Small triggers are inside of the large triggers. Can you give me a Y if you see that this means that we don't have the momentum we need on the push up? Not only do I not have the momentum that I need, even though my path is clear, the market is trading well below those triggers. Rule number 1 wasn't met. No reason to enter at support inside of triggers. Avoidable loser. Pretty cool, right? That's what we do, guys, each and every day. Have an advantage. So I want you to get in the habit of speaking out loud, Renko bar users. Do I have momentum? Is my path clear? Can I define an entry? Yes to all 3. You will be chomping at the bit for that great entry. One advantage goes away. Lean on the other 2. So that first trade in your plan is void of a clear path. It means that you want to insist on momentum in an entry in a medium probability scenario. And guys, if you look at your chart and 2 out of 3 are gone, it's okay to do nothing. I can't stress this enough. It's all right for you to stand up and walk away. It's okay for you to go walk the dog or toast a waffle, because it's low probability, and there's going to become a point in your life where you just don't even want to risk money in low probability because you know the next trade is coming. Guys, the futures markets trades billions every day. It takes $400 a day to put yourself in a 6-figure income. That's it. And that's what this trade, that first trade, is going to teach you, is how to recognize when the edge is present. Any questions on NinjaTrader? 2 charts. Know where the advantages are found. Know where the entry comes from. It's only 3 rules. And every time you practice this trade, guys, drop it in the room. Let's talk about your ability to read the indicators. That's NinjaTrader. Now let's go to TradingView. TradingView is minute bars. TradingView is not Renko bars, which means these take a lot more time to produce, to read. So Your 15-minute chart is going to be your roadmap, guys. This is going to be your roadmap for key targets and turning points. You're going to make sure that you're trading with the momentum on the large chart. That's very similar to Rinko, but it has a different look. Your 1 minute, this is going to be your entry chart. The 1 minute chart on TradingView is where you are going to embrace the exact same lesson of momentum, separation between the small and large. The large chart is too slow for this, guys. So momentum, that separation on the triggers, is going to be a 1 minute endeavor. It's going to help you find momentum trades. On your large chart, you have to read it a little differently than you do the Rinko bar charts, guys. So instead of looking at both sets of triggers, I want you to focus on your small triggers and ask yourself, what direction are my small triggers going? Does everybody see that the small triggers are going down? I'm looking for short trades. That's it. I'm looking to not fight that. So once I recognize they're going down, my brain starts thinking, all right, I want to go down with them. And there's three sides where price may be. And all it is price, guys. And look how each bar is a different size. So we're going to look at wherever price is currently. And number one here is what we call the strong side of those small triggers. And when you're on the strong side of small triggers, these are going to be the easiest shorts. And if they're going up, those are going to be the easiest longs. Those are going to be the longs that are harder to stop. If you're inside of the triggers, this is kind of a transition. It's still nothing but shorts, but you're going to put your management hat on a little bit. You're going to make sure that you've got room to targets. And then once you get to the weak side, guys, number 3 here, to the right side of the triggers, this is kind of pre-reversal if it's going to reverse. As you get to the weak side, you might see those small triggers start to pinch, start to roll. That could be a change of direction. So if you take a short trade from here, it's so important that your 1 minute chart is 100% on board. Let me give you guys this picture because it is a different read, guys. Your large chart, your 15 minute is going to define, see how the triggers are down? There's our in the moment read. Small triggers are down. Price, well, it went from, there's your weak side. I guess the market's opening right now, so we've got some giddy up. Let's see if crude oil is a little more tame. Triggers are down, but price is on the weak side. So if I took a short, I'd want a clear path, and I don't. And you can see over here as well, my 1 minute chart says up, and my 1 minute chart says up and strong when this says weak side of down. Can you give me a why? If just by saying it out loud you hear that there's no cooperation between the two. This says down and weak. This says up and strong. Who's going to win? I don't know. Let's let those triggers roll. Let's get to the strong side. Let's let both charts agree and look for an opportunity. So 15 minute is slow, guys, but it's going to give you that good look. And once you ask yourself, what direction, where am I? Is there anything in the way? Is there anything in the way on the large chart? Is there one-to-ones? Is there a zone? Is there a VWAP? Is there mid-band? Is there divergence highs or lows? Because you have to have room to targets. Entries come from the 1 minute. You're going to use the mid-band for trend trades to trade with the large chart. You're going to use HVA lines. When a termination is reached on the large chart, there's a trade that allows you to catch that closest to the termination. That's our HVA trade. And then there's momentum trades, guys, and there's checklists to get you into all of them. So when you go to your large chart, see how I said when your weak side of small's down, that's your transition. That's when things may roll. So crude oil just went. Small triggers up. Strong side of the small triggers. Momentum is up. I'm just going to wait and see if they give me an entry. And I don't really have an entry zone just yet. So I'm going to pause. S&P. Small triggers are down. I'm strong side of the small triggers. I've got smalls below the large. on my 1-minute chart. And ladies and gentlemen, we just missed it, but that's your momentum trade. Small triggers down, strong side of the smalls, odds favorable momentum, those strong triggers, and it snaps right back to an HVA line at 1450. And it's still going down, and this green line represents the one spot that could cause trouble, and you can see that they're breaking through it. So did that make sense? TradingView users, can you give me a Y? And let's just break this down, because this is the perfect momentum trade. Your read on the large chart. Small triggers down. Price on strong side of small triggers. Nothing in the way. Smiley face. So what's the 1-minute read? This is where that strong trigger look comes in. Strong triggers. And that means that the smalls below large, space between. Momentum rules say when I have this look, sell a pullback to an HVA. And guys, that is your momentum trade at 1450, right there at the HVA. Your stop would go a little bit above that zone, above that HVA. That's your protection. That's where the market shouldn't go. With all of this momentum, that's your entry. And if you were in at 1450, you are in the money. And guys, there's your checklist for it. Where is it? No terminations or zones on the 15-minute. Strong triggers. Any pullback to an HVA line for entry. So how do you get good at this? Practice. How do you get good at this? Take a lot of pictures. How do you get good at this? Go to the spreadsheet that I gave you. If you're a NinjaTrader user, strong triggers, clear path at an entry. That's your recipe. All in green. Click on the pictures. Add your own pictures. Weak triggers, termination conditions. Sit on your hands. Do a whole bunch of nothing. Client trades, guys. Over 500 pictures of you guys being brilliant with Rinko charts. I've stolen them over the years. I've created a huge database. And what you're going to find is that all of the high probability trend trades look exactly the same. Every one of them has momentum path and entry. There's ideas on management. This first section's from the KISS plan. You're going to see patterns that repeat themselves. There's a place to build your plan and even a trade tracking sheet, guys. Every time you post in my room, it's a private session. Every time you post in my room, you're going to describe the momentum that you saw. You're going to identify whether or not there were terminations, it was the potential to break or a clear path, and you're going to use the language on your chart through annotation. Bought a pullback to an area inside of triggers. And if you go through this process, what you're doing is you're committing this pattern to memory, but you're writing a recipe to never miss it when it happens. And your annotations are going to help you find success. When you annotate and you say something like, I had a clear path, right? And you drop it in my room. Guys, we're going to talk about how that was a termination and not a clear path. If you tell me this was momentum, we're going to talk about it. We're going to go back and we're going to revisit that rule so that you can read your indicators properly. If you entered from the wrong side of the triggers, we'll have that discussion. So guys, not only do I want you to post in the room and show me what you saw, I want you to get these pictures into your trade tracking sheet. That's the last page of both of these. So there's your trade tracking for NinjaTrader. TradingView, there's all your trades, pictures, management, terminations. There's your trade tracking for TradingView. And guys, what you're going to see from the feedback in class is very often it's going to be high fives and gold stars. I'm so proud of you. Great job. You did this perfect. I can't believe how awesome you are, right? But sometimes, because this is an educational process, I'm going to have to say, dag nabbit, you traded into a termination condition. Hey, you traded without momentum. You jumped in a little sooner and it increased your risk, guys. And the feedback section on this spreadsheet is huge because there is nothing you guys can make a mistake on that I can't help you fix. I've made every mistake, most of them twice or 500 times. So look at the feedback, guys. And every morning, come back and study what you did yesterday. You'll find that you have a thing. For most of us, the thing is trading and determination conditions at first, because that's the biggest thing that's going to make you sit still and not be in a trade. Ask yourself what worked, what didn't work, what felt easy, what felt forced. And what you're doing is literally you're taking 3 minutes of your life each and every morning as you sip coffee, and it's going to set you up for the day. I'm going to focus on the things that are great, and I'm going to focus on avoiding the things that seem to be taking my money. And guys, that's your path. That's our first. We did it in 30 minutes. Whew. Learn the rules for the trades you're taking, guys. They are on the plan provided. Whether it is a high probability trend trade or that potential to break trade. Learn the rules. Oops, I closed out my TV plan. Know where your rules are met. Use your checklist, guys. The traders who fail are the traders that don't follow a plan. The traders who tend to fail are the people that change their plan based on one trade. The most successful traders that you'll ever see do the same thing every day. The same trade, the same rules, the same management, the same entries, the same exits, the same path every day, because it creates an edge. So post in the room, tell me what you see. Let's make sure you're seeing it correctly. My job is to help you read indicators. My job is not to tell you when to get in a market. I don't give trading advice. I won't tell you how to manage your trades. I'll hand you a plan, as I did this morning, that goes from entry to management. Keep it simple. Keep it focused. Build a foundation. Learn a little bit every day, guys. But learn the looks so they become easy. Because when you can identify this pattern looks the same on gold as it looks on crude oil, as it looks on the S&P. Check it out. Strong triggers, potential to break. Guys, give me a Y if you see that divergence and how that divergence just pushed you where the market shouldn't go. Can it be that simple to learn just some very basic rules giving you an edge? It means that you have to sit still a lot, guys. It means that you have to be patient. It means that you have to wait for the best of the best. Have you guys seen John Novak's working on the automated? 3 triggers through. Doing a little back testing today, guys. Just everybody wants to be a beta tester on this. We're already beta testing. But do you notice that it's strong triggers and its potential to break and its entry at a pullback inside of triggers? Ladies and gentlemen, it's such a sound plan that we've spent the last 6 months trying to write those very basic rules into an automated system. Pretty cool. That's really where we're starting. So now let's read. This is crude oil, guys. Small triggers are down. Large triggers are still up. And none of my triggers have broken through areas. Do you see how a short trade could be problematic? It looks like you have a clear path here, but the reality is you don't have strength, and all of your triggers are above this fib. This is a market that's more likely to go up. These are fibs that are more likely to stop forward progress than they are to just allow the market to go down. Does that make sense? No momentum, no clear path. Let's sit on our hands and do nothing. Yes, maybe. Only the potential. Divergence is the biggest killer of that potential. And guys, look at what the market's doing. If you were bored, you might have tried the short. If you didn't understand that that was only potential, you may have tried the short. If you weren't looking at your checklist that tells you divergence, no trade, divergence, no trade, you might have just given money away. And guys, it's not the money you make. The money you make will be easy. It'll be simple very, very often. It'll happen very quickly when the advantages are present. It's those avoidable losses that destroy an account. This is the S&P. The small triggers are down. We're on the weak side of the small triggers. And notice how your smaller 1 minute chart, those small triggers roll against, they get above, it's momentum going up. There's no short trade here, guys. You can't fight those triggers. It's a lot of patience. When they all come together, life is pretty good. The smalls were down, but there's no place to go. It's on the weak side. There's strength up. And I hear, I hear in my ear that trend trade on the automated system is now up 25 with a trailing. How's that for a great way to start the day? Have you guys been following John Novak in the other room? Strong triggers, 3 triggers through, pull back to an area inside of triggers, and guys, I'm up 27 with nothing in the way. Trailing stops. Pretty cool, right? Can you guys see it? And I don't want you to worry about the trade or the money. I want you to see strong triggers, 3 triggers through, pull back, and there's your entry. Guys, it's a recipe. That's the best of the best. The best of the best. Now we have strong triggers, but we don't have a clear path yet. So we're paused, we're waiting, we're holding. Now our smalls are up, but our large are still down. They're trying to make that roll, but they haven't made it yet. So we're waiting, we're paused. Can you guys still hear me? Super quiet class today. The rest of the day, guys, is going to be chart reading. It's going to be looking at what you guys post in the room. So let's start. Paul gave us a couple in there. Paul, you called this a momentum trade. So let's take a look. Small triggers down. At 48, you're in the transition side, and there's nothing in the way all the way to those 1-to-1s. And Paul, it looks like your entry at 48 with strong triggers, you just kind of jump in below trouble. With all this momentum and clear path, I love this. Paul, what you did is I think you just started building the recipe for the chili dog. So help me out, ladies and gentlemen. Whoops. I'm going to point to the things because it's a slower chart. Do you see the smalls down? And price is right here. It's in transition, but the smalls are down, transition phase, nothing but shorts, and room to get all the way down to these 1-to-1s. Can you guys give me a Y if you see it, TradingView users? This says down, down fast, nothing in the way. I love it. I want you to see what Paul did here. I don't have rules for this. Paul said this nonsense could create a bounce. Let me enter when I get below the nonsense, and I'll hold that all the way to trouble, down here around 23. So large chart led the way. Large chart said down, nothing in the way, below trouble. And he just waited for it to get to below trouble and just jumped in, jumped the fudge in, and rode that momentum all the way down to trouble. Paul, this is awesome. And I think, guys, that might be the TradingView chili dog, which is a trade I see a lot of you guys taking. And then Paul takes the one that we just circled in the room. Small triggers up. It was strong side of the small triggers. Odds favorable momentum. Does everybody see the pullback right to the HVA with strong triggers? When the large chart said we had room to trouble, that's your momentum trade. And Paul, you just rocked it all the way up to trouble. Is he discounting 1-to-1s as trouble? Where are we talking about, David? Right here? Right here? The yellow ones? Let's do this. Yeah, this is going to help. That's a great question. So the big chart, big crowd, people in charge say down, down aggressive, room to trouble. So that's your overall look, David. These 1-to-1s, because the entry's up here. These 1-to-1s represent something that could create a bounce. But the large chart says down and strong. So you would see them, you would recognize them, and you're going to see this a lot, David, where you're going to say, okay, maybe when I get here, I'll take my stop from there and I'll go break even. So if this messes something up, then I'm good. Or you may just say, with all that momentum, I'm willing to keep my risk on it because the overall consensus is nothing but down. So you will recognize them and you'll say to yourself, okay, there is trouble in the way. Where's my trading view chart? There is trouble in the way, but what's my overall look? What's if I'm trading with a large chart? Let's do this on crude oil. Was there the momentum trade on the crude oil chart? I don't remember. Maybe it was S&P. So that was it right there. So when everything's said down, good morning to you, David. If this was my entry, that line could create a bounce. This line could create a bounce. One of my favorite things to do, guys, and maybe a little management lesson. When I'm in a momentum trade, my initial stop is going to go behind the area. When price breaks below the area, I'll just chase it with a stop. Every time it breaks an area, I'll put my stop behind the area. So if it gets me, who cares? I'm already up money. So knowing that they're there is awesome, but recognizing that you're trading with the large chart and it says down is going to make it a little easier to not spook yourself on a couple lines on a smaller, faster chart. And sometimes they're stacked, guys, and this is why it takes a little bit longer, I think. But let's do the read. Small triggers up. They're trying, right? Do you see those pink 1-to-1s? I want to be above those. I don't want to trade into those. And every time this zone that lines up with those 1-to-1s creates a bounce, it's a little problematic. Let it clear. Let it get north, right? Or let it roll and go down. But you don't have to trade into those areas. So even though it's up and I'm strong side of up, guys, these 1-to-1s represent some nastiness. I don't want to take an entry from below them. I don't want to take an entry directly into them. If I take an entry, I want the market to come up above and pull back to them and use those as support. Does that make sense? And look what's happening right off of those 1-to-1s. And you can line it up with the areas over here, and there's your little push down. So it will take a little bit of time, but I encourage you guys, do not think of minute bars as Renko bars. Do not think of Renko bars as minute bars. It'll make the transition a lot easier if you're making that transition. Pete says, check it out, Mark. 3 divergences in the same price range. I can't go short. This is a termination. Odds favorable momentum. Everything is up. Strong trending market because it's 30 bars in the same direction. And look what Pete does. And guys, this is universal. When you break resistance, it behaves as support. So Pete lets price and triggers get above and pulls right back to the area inside of triggers, now behaving as support, and rides that strong trending market up to profits. And this is an awesome short little snapback, but it snaps right back to support, right inside of triggers, continues up with the strong trending market with a clear path. Nicely done, Pete. Good looking trade. And then Gary, I like this. So Gary says, check it out, Mark. Mid-band held. We're above the 1-to-1s, above the 1-to-1s. The small triggers are up. I'm on the strong side of the small triggers, and it pulls back. I've got the mid-band. Let me get in on the correct side of triggers to go with everything. And that's exactly what he does. He just rocks it up. And then with strong triggers, he buys the pullback to the zone and rides it up even further on the momentum trade. This is great trading, Gary. Great chart read. Great patience. And then when the momentum dies on his momentum trade, he exits. He doesn't hope. Beautiful trading, Gary. Great chart read. Miss Jen. Small still outside of the large. Pull back to the area. Inside. Pushes down, you get paid. Out break even. Divergence not a problem. 4 triggers through. Nicely done, Miss Jen. Smalls, 1 line outside. Clear path. Area right at the top. It does overrun a little bit, but not too much. And down it goes. Nicely done, Miss Jen. Just patterns. Just patterns is all it is. Not a lot of pictures posted. Are we in waiting mode a lot today, guys? That's okay. All right. Rick, good to see you in here, man. Rick's saying, look at those strong triggers. And with strong, uh-oh. Did you really do it? Look at this, guys. Remember when I said that with momentum and path, that's your core? Momentum and path, nothing in the way. Let's scroll down to the happy stuff. Rick says, check it out. With all that momentum in the path, I'm just going to jump in. And because I know the only thing that I'm working with is momentum and path, I'm going to get paid quick. So from 9.7 to 10.3, $60 a contract, I'm assuming, for 7 contracts. And then 7 to 4, another 70 on 3. That's a lot of math, but nice trade, Rick. Momentum and path. You guys see it? And he gets out right before he gets to trouble. What is that, gold? So that's 10 points a tick, which means you made 6 ticks times 7, 420. 7 ticks times 3, 210. A little over $700, 660. In that tiny little section based on momentum and path. Nicely done, Rick. Cav, market coming from a good bottom, strong triggers, price reverses, strong triggers, didn't reach trouble, price pulls back to the area inside of triggers, can't make it 5 ticks below, and Cav rides it up to the promised land. Nice trade, Cav. Nexgen dynamic Renko users, do you see it? First it's momentum, especially my new users. First it's momentum, it's 3 triggers through, it's a pullback to the areas inside of triggers, it never goes where the market shouldn't, and he finds a way to make money. Nicely done, Cav. Great job. Great job, and we are already through all the pictures that you guys have posted. So let's do this. You guys, can we do something fun? Because I can talk about this stuff all day long. Do me a favor. Take a picture of your S&P large chart. Give me your chart read. Tell me what you think it says. And let's do a little chart read when I get back, guys. I'll be back in 5 minutes. I'm going to go stretch my legs. All right, guys, here we go. You know, it's funny. I told my wife, I told him, take a picture and tell me what you see. And then I told her, I said, not one of them are going to do it. And I was right. Everyone in the room is so good at reading their indicators, they don't need that feedback. See how price reached a divergence high? And now it's back below it. Guys, your market is consolidating. It can't seem to break above divergence, and it couldn't break below the one-to-ones in the mid-band. You're just waiting. Just pausing. Small triggers up. Weak side of the small triggers. Where's the current price? There it is. These say up. That says up. Do you have room to make money? That's the question you have to ask. Do you have room to make money? Smalls up, strong side of the smalls. You had strong triggers, it just didn't pull back to your HVA. I'm not sure that you found an entry there. Odds favorable momentum, strong triggers, absolutely no clear path. Do you guys see it? Smalls above the large, space between. I have momentum. Price reached a divergence high. No triggers broke. I don't have a clear path. If I took an entry at an area inside of triggers, it is a medium probability scenario trading directly into a brick wall. This should be your thought when you see a termination condition. There's just nowhere to go. Nothing to do. All right, guys, I'm going to put it on you because it's a quiet classroom. One trade, $1,000. That's a good morning. All right, what do we see in crude oil? Does everybody remember when I said all the triggers were above? It's more likely to go up than down. It took it a second, didn't it? But trigger lines tell the story. You guys that are, I know that I've got a bunch of people in the room that are trying to figure out TradingView, that are transitioning from Renko. Absolutely. Ask questions, guys. So here it is right here. So the small triggers are up. I'm looking for longs. I'm on the strong side of the small triggers, supporting those longs. The challenge is it doesn't look like it gave us an entry because I'm not trading into an HVA. I'm not trading into a mid band. I'm not fighting the triggers. So when everything finally agrees, the one thing that we didn't get was some sort of pullback to the HVA to get us into the move. Does that make sense, TradingView people? We're still only looking for longs. So this is where we have two options. And there's two entries on TradingView. And they're in the trade journal under the trade looks. So the first option is the momentum entry look. When you have really strong triggers, so this is where momentum comes in. Nope, I didn't see one. When I've got strong triggers, sell a pullback to the zone. Sell a pullback to the HVA. Well, guys, I don't have a zone or an HVA, which means that my momentum trade is off the table, which means what I really am hoping for right now would be a pullback to this mid-band and a close on the correct side of the triggers at the mid-band. So since there's no areas, HVAs, or zones to take a momentum style trade, my next entry is going to be a pullback, which means that my small triggers are going to turn against me, which means that I shouldn't under any circumstances fight them. And it'll be a close on the correct side of those small triggers. And my checklist says at a mid-band. So let's see if they get there. What do you say? You guys just want to watch crude on TradingView and see if it sets up a trend trade? Now, if I had a zone right here, something for it to bounce off of, that would be a great look, but I don't. So this is it. See how the small triggers are starting to turn, right? And you can see that push. And now we're just rooting for it. Come get us, come get us, come get us. Let's get to that mid band. My rules say. My rules say. I love that phrase. No terminations on the big chart. Yes. Yep, that's momentum. Where's my trend trade? 15-minute, not trading into zones. Yep. 1 minute, not into 3 divergences against a trade or a zone. Yep. Buy or sell a close on the correct side of the small triggers at a 1-minute mid band. Isn't it amazing? You don't have to jump in. You don't have to hope something happens. And now, as we get to this mid-band area, guys, I need those small triggers to catch up because my rules say I need to be in on a close on the correct side. Is everybody with me? I mean, small triggers up on the large chart. Strong side of the small triggers on the large chart. Room to get back to trouble on the large chart. Pull back to an area, to the mid band, but the rules say wait for a close on the correct side of the triggers. So, caution. So, John, when I say a close on the correct side of the triggers, let me show you exactly what I mean. See how your small triggers are coming down? Coming down, coming down, coming down, coming down. My entry isn't until price bar finishes above those small triggers. These small triggers are an immediate momentum indicator. I want to be in on the business side of them. It makes it easier to win the trade because look at this. It started to go up and didn't close and pushed back down. And it tried to go up, didn't close, pushed back down. John, you're on the Rinkos though, right? You're on NinjaTrader? Right on. So it's a different style. If this were Rinko, you just would have sold that mid band, right? With everything up and strong, you would have sold the mid band. Made it to the mid band, guys. Look at your small triggers down. There's no entry yet. You don't have to hope. You don't have to wish that market to go up. Just wait for rules to be met. If we're going to take it, I've got 39 seconds until I know if it closes on the correct side. I love that timer, guys. That timer is money. For those of you that share my affliction of wanting to jump into the market too soon. 20 seconds. Are we going to get a close on the correct side? Jerry S., what do you think? Does the entry make sense, Jerry? Shannon, lost NPC. Does the entry make sense? My rules say wait for a close on the correct side. Pablo, Todd, does it make sense? This is it, guys. Look at that. It didn't close. We're back into a holding pattern. I've got 55 seconds. It takes a minute. It does. I think that one of the best things you can do, guys, to get good at this, click on the pictures of a trend trade. There's your pullback, right? There's your close on the correct side. And there's your continuation up. And if you do this over and over, perfect entry. What's it look like? Pull back to the mid band. Don't go, don't go, don't go, don't go. Giddy up. Let's run. So learn the pattern. Learn the look. Embrace the idea that you don't have to fight these small triggers. And look what happened on your large chart since then. Small triggers are down now, right? Price is almost on the angry side of the small triggers. If you're going to try that push up, not fighting those triggers has saved you 3 times already. That's the part I want you guys to get. You never got the entry. You never took the loss. Smalls are up. Smalls are strong. Strong side of the smalls. We're above trouble with room to trouble. Strong triggers. This area didn't break yet. It would have to push just a little bit lower. Smalls are up. Strong side of the smalls. Does everybody see that big ugly midband right there? And that big ugly midband is two zones and one-to-ones inside of a zone. And sure enough, the market seems to be pushing down. No place to run. Nowhere to go. 90% of your day, ladies and gentlemen, 90% of your day is sitting on your hands doing nothing. 90% of your day is waiting for it to do this. Smalls below the large, 3 triggers through. There's divergence potential. My rules say if divergence prints, I can't sell the pullback to the area inside of triggers. That's what the KISS plan says. 3 triggers through, all the momentum, and guys, if we hit this blue fib, you got to cancel because that's a termination condition. Does that make sense? So we're watching this negative number right now. Is divergence going to be true? If it is, the KISS plan says no trade if you're a brand new user. Why? Because divergence is the absolute biggest killer of this trade. But let's take a picture real quick for you entry rule guys. If a reversal bar prints, the market is most likely to retrace somewhere between the bottom of these triggers and the top of these triggers. Can you give me a Y if you're with me on that? If I get a reversal bar somewhere between the bottom of the triggers to the top of the triggers, that's where the retracement's most likely to go. It's most likely to bounce from the areas within. Guys, that's your window of opportunity. A limit order would go a tick or two below that resistance if we get the pullback and the fib wasn't hit. So you will literally be able to call your shots before you ever enter. Divergence high is still holding, guys. If you took the trade directly into it, you knew exactly where to manage out. And now it's even divergence and no clear path. It's okay to do nothing, guys. They're getting caught in a little range here. Oh, didn't get us, but it was trying to, wasn't it? Odds favorable momentum, nothing in the way. That's that automated system again, guys. It's taking everything I teach every day. Pretty cool. That's been a lot of fun to work on. We've been working on that for the last 6 months. It's not easy. This has got to be perfect. Got to be perfect. You guys have the skill set to recognize perfect. You guys can say, okay, it's up, but I'm on the wrong side of that divergence. No reason to take that trade. Do you guys see that? Strong up. That's your trouble. Smalls against it. If you were going to take a trade, it would be a pullback to an area with a close on the correct side now. It's up. Just nowhere to go. What's crude oil say? The trend trade never worked, did it? And now we're strong and strong side. And we got to get below 97 to feel like we have a clear path. We have to get below 97 to feel like there's room to get to the next area. Does that make sense, everybody? First it's down, then it's strong side, and then the magic question that's going to keep you patient, is there anything in my way to ruin my good time? And do you guys see that the bottom of that zone? That is decidedly in the way to ruin your good time. And that's what it looks like on Rinko. It happens to be Fibonacci, guys. They line up. It's just different platforms. S&P is bouncing up. Well, momentum and path seems to be working. This one made it up to trouble. We're already break even. Protecting our investment. Second contract's on the wrong side of all the good stuff. This is one of the challenges, right? It's preset, it's automated. It would be okay to pull a target, to manually, to say, hey, you know what? That's a lot of stuff that could create problems. Let's move a stop. That's going to bug my brother that I did that. But how cool to have something that tells you exactly where the best entry is and puts you into it. And here's the cool thing is when the second contract is hit, it's a trailing stop. Some of you are interested, some of you are not, but I thought it would be kind of cool to show that in there, and I'm running it in the background. But it's already up almost $1,500 this morning in the NASDAQ. I haven't had to touch it, which is pretty cool. Oh, it hit but didn't fill. Yeah, Jerry, you're going to love this. You know what the background is on the auto? That's it. That's it. A trade that you can prove wins more than it loses. It's the recipe for a high probability trend trade. And in some cases, 3 triggers through medium probability. That's it. Guys, it's no overthinking. Look, it's momentum, it's path, it's pullback, good stop placement, take profits, and now mine has a trailing. So I take 3 contracts off and now I trail it. Been going through this for 6 months, Jerry, to be able to recreate what I teach in this room every day. What I teach in this room every day is the basis, the core. It's everything. There isn't one yet, Paul. There isn't one yet. It'll probably be for lease and not for sale. Well, what it does, Jerry, is it helps you recognize when your rules are met. I guess is the best way to put it. Is it helps you recognize when you've got the highest chance of success with a green arrow. Guys, let's just go back and don't worry about what's going on. Momentum, 3 triggers through, there's a signal. Only 2 triggers through, there's no signal. That one didn't actually do it. I was watching that this morning. Momentum, midband's not a termination. That was a good look. But it's the same thing that we talk about. Momentum and path. There's a yellow arrow. Momentum, 3 triggers through. There's a green arrow. Momentum, 3 triggers through. There's a yellow arrow. Guys, it's nothing that you haven't heard every morning in this classroom for 6 years. Just helps you not hesitate, I guess is the best way to put it. So I told John I wouldn't spend a lot of time on this in the room because I like teaching people to read indicators, but that's probably going to be available soon for you guys that would just rather have something else think for you. And I think, and this is my 2 cents, if you take this amazing setup and then maybe you get paid at areas just a little bit on the management side, but I've got nothing to lose. I've got all the trouble. I can't do worse than $120 on my final contract. And I'm not sure how much I've already made on this trade. From 46 to 64 is 400 on a contract, I think. So, and it's still going. And guys, if it doesn't take me out, watch this. Here's one of the cool things. And Victor, you were working on those trailing stops, and I know Pete uses them. If this market strong trends up, this is just going to go right behind it and make a cha-ching noise. We'll come back and check on it, see what it does. And it would be, Brian. It would be, are my rules met? And then you see it visually. Yep. There's that crude oil. Now we're below trouble. Probably in the next week or so, Jerry. John and I spent the weekend running NASDAQ, running S&P. He was looking at the YM. We're looking at gold, looking at crude. Crude is the only one that it tends to have trouble on because crude doesn't move as much. And it's a trend trade, right? So if you have a market that isn't trending in the afternoons, like there's a definite time frame, but we are getting every data point right now. Every data point. Hey, Bank Vault, the white bars you don't understand. You see four, the third white bar is a retrace breakout bar. So they're actually all breakout bars, Bank Vault. So this white bar right here, that's a breakout to the downside. And when this second down bar prints, it creates that pink HVA line. And that pink HVA line is the line in the sand. That's where you have the highest concentration of sellers on that breakout bar. And you can see it, it's the two lines. Everyone has an HVA line. But the way we use it, and I notice that you may be new, is they are independent of one another. So they're not connected. This was a breakout down from the mid-band. That was your highest concentration of sellers, but you never got a confirmation bar. You never get a pink line. Here it breaks out down again. Confirmation, you get the HVA line. And Bank Vault, we use these HVA lines when the rules are met to trade with the momentum. There's your breakout up. When this confirmation bar prints, it creates the green HVA line. If the rules are met, you can buy that line. This was a breakout down. There's your confirmation bar. There's your pink line. And once you get the breakout up, I believe that's a breakout up, that pink line goes away. So you could get just sidetracked on these white bars all day long. Let me show you how you can use them most effectively. You know what? I'm going to go to the spreadsheet and I'm going to show you in the trade journal. So the first way you'll use them is the HVA trade, Bank Vault. And that is as a trade. The rules say when the 15-minute zone holds, this is just the small chart look, and your small triggers roll above the large. See the breakout bar right here? It creates that green line. If the market's trading from an area on the large chart, that's your first opportunity at long to get in. And then with strong triggers up here, you would buy that HVA long again, looking for continuation. So that's how you use it first. And then within the move, you'll have the momentum trades. And the momentum trades say, if you have strong triggers and you pull back to the HVA line, go long with it. Does that help a little bit? I don't know. Retrace breakout bar is a language I'm not familiar with, but you'll see these all day long. So there is a breakout bar. Let me see if I can bring this to the front. Send to the back. Bring to the front. And we'll see what it does. Small's down, strong side of the small. Does everybody see how they hit the mid-band? That's your trouble spot right there. Makes sense? Awesome. That's your trouble spot. Does everybody identify the trouble spot? Mid-band and that VWAP if you have them. Those VWAPs are nasty. So now we've reached a zone. If that's a breakout up, if this is an up bar, we'll see a green line off of it. The rules would give us an opportunity there. NASDAQ made it to 68, right to the bottom of the zone, and that's where it stopped. Isn't that amazing? You guys know where turning points are before the market ever gets to them. 2 triggers through and divergence. Only 2 triggers through and divergence. We'll see what happens. Straight to resistance. Back to support. Guys, no clear path either way. No real momentum because the colors don't match. And sure enough, resistance held enough to take me out of the position. But I'm up $2 having not touched it. That's kind of nice. What do you guys want to talk about? I feel like I'm just rattling. We've done our large chart reads. Small's below the large. I have momentum. Only 2 triggers through. I don't have a clear path. Oh, you know what, Mike? True story. I woke up this morning and I thought, holy smokes, I forgot to talk about taking half off. Thank you for bringing that back up. I actually thought about that this morning. So let's do it. Guys, this is going to be a simulated trade. Please, let me see if I can find something with some room. So, Mike, I'm going to go short 4 just for grins. And I'm going to get my stop loss way out of the way because I want to talk about taking half off. So if I have a profit target down here and I'm short 4, do you see it? Guys, this is not a real trade. This is a how to manage lesson. If big chart red, but 1 minute's got triggers, that's okay. Well, the large chart is small triggers down. We're on the strong side of the small triggers. There's nothing in the way. Do you see it? Everything says down. Actually, I had strong triggers. You could have sold the pullback to the zone to be in this. But the lesson here is, so I'm short 4 and my target is down here at the zone. Let's say I want to take 2 off on the way down. Mike, what you're going to do is you're going to change. Or if you want to stagger it, you can make it 1. And then you could say, okay, I'll buy 1 back right there. I'll buy 1 back right there. I'll buy 1 back right there. And what you've done is you've used a limit order. So it just hit the first one. And now we're at 3 contracts. And if it goes to the second one, Mike, you'll see this adjust to 2 contracts. If it gets the third one, it'll adjust to 1 contract. But guys, that was your momentum trade. So a more logical stop would have been initially behind the pivot that gets me in. And then if you took profits at trouble, some of you might go break even. Some of you might say, okay, I'll leave a little bit on behind the zone. Some of you will keep your original stop because of what's going on down here. Does that make sense, Mike? And guys, you got to recognize trouble is trouble, right? But we just had strong triggers and a pullback to the zone. Maybe you add back on, knowing that this is trouble, but with strength. So that's how you're going to do it. And then, guys, if you're in a short and you just want to get out, Mike, you can also go buy. It'll kill a contract. Buy. It'll kill a contract. Buy. It'll kill a contract. And now we're down to 1, which means that I probably want to cancel these and just put my target wherever I want my target. You guys want to see if strong side of the small triggers just keeps pushing it down? Being aware of the zones, right? No reason to lose money into a zone, guys. You know it could create a bounce, but everything says down. Triggers are strong. Life is good. And every time I get a pivot down, I can just chase a pivot. So now I've only got $90 risk, 1 contract. And if it continues down, retraces, you can just keep chasing pivots. And then if I hit buy 1 more time, it pulls me out of the position completely. But what was the large chart read? And that's probably why it made this so easy. TradingView people, do you see it? Smalls down. Strong side. Nothing in the way. Momentum and path. Momentum and path. And then come over here to refine an entry, guys. There's not always an entry. Smalls are up. I'm in the transition side of the smalls, but it's still long trades. If I'm going to look for a trade, there was my close on the correct side of the triggers. but the zone stopped it, right? See how it tested and pushed back, and now smalls and large are both down, and I can't fight it. Does that make sense? If I tried the last ditch effort, close on the correct side, it was short-lived. And now I've got strong triggers to the downside. I'm only in the transition over here. And sure enough, the market continues to push down. Some of you recognize that price reached a zone on the large chart, that the small triggers got below the large over here on my small chart, that you could have sold a pullback to the HVA, and that was your start on the short from the termination. And 44 represents the large chart trouble. Two triggers through, divergence prints, and they're still not breaking the areas. Everything we do, ladies and gentlemen, if you have a checklist, has anyone ever baked a cake in here? Am I the only one? You know how a cake recipe is very specific? 4 cups flour, 3 eggs, 2 cups sugar, 1 cup milk. What happens if you change the recipe? You get different results, right? If you bake at 400 instead of 325, you get different results. If you flour instead of sugar, you get different results. Guys, one of the things that these checklists do for you is they give you consistency, different textures of the cookie, all sorts of, exactly, Todd. So what you can do is you can say, my recipe says momentum, clear path, and entry. And without the clear path and losing momentum, I don't have to bake that cake because it's probably not going to turn out well. And look what the market's doing. And guys, I don't know whether the market's going to go up or down. Trading is about probabilities. Trading is about identifying a pattern that you can prove wins more than it loses. And once you identify that pattern, committing to it. I don't have momentum. There's no place to go down. There's no place to go up. Guys, I am better served doing absolutely nothing. I am better served doing absolutely nothing into a termination condition that could stop the market, because dang it, it did. And look at this. Support stopped the market, and support stopped the market, and a divergence high stopped the market, and support stopped it, and 1-to-1 stopped it, and a divergence low stopped it. How cool is this? Only 2 triggers going through. Weakness, and it goes down. You guys have the recipe for success. You have the keys to the kingdom. You have the golden goose. Don't turn it into fried chicken. How long does it take to learn it? I don't know. Everybody's different. Everybody's different. But if you learn the basic rules and you don't chase money, you guys are going to hear me say this a lot. If you're chasing the money, you're not focusing on the process. So learn the rules, learn the looks, commit them to memory, commit to them. Simulate, practice, get feedback. There's a path to getting there quicker, right, Cav? Post your trades in class, track your real-time performance, guys. There's a recipe for getting there the fastest. You guys want to see what I did? I just don't have any problem sharing all the troubles I had. I omitted having rules when I started with the software. I omitted taking pictures. I omitted participating in the room. But I got lucky on Simulator a little bit. And I decided that I was a genius because my last name was Novak and my brother wrote the software. And I lost $5,000, guys. 21 trades. I remember it like it was yesterday. That was a tough day. That was a kick in the clackers. And I got knocked all the way back to the I don't know stuff stage. And when I got to the I don't know stuff stage, guys, that is where I committed to the path. And that is when life started getting much better. When I focused on the chart roots, when I focused on the rules, when I focused on the methodology and not the results follow, guys. Still hasn't broken. Still trying to get through support. They're leaning, but they're not there. Every trigger is above this fib. Every trigger is above this fib. Every trigger is below divergence high. Every trigger is below that fib. It's almost as though your rules have drawn the perfect range that you need to break out of to find an advantage. Let's say so Bank Vault, what platform are we talking about? TradingView or NinjaTrader? TradingView. I want you to ignore the color. How's that, Bank Vault? So let me read it though. Let's say the big chart's red. Obviously the small chart can change faster. Let's say it's green. If we get triggers on the small chart with nothing in the way, is it okay? Red on the big chart, TradingView. So check it out. No, you're going to dig that. It's a great question. Let me see if I can find an example. Big chart's green, right? TradingView? I'm sorry. I called you TradingView, Bank Vault. There you go. There's your new name, brother or sister. Do you see how the background is green, but those small triggers are down? You're on the strong side of the small triggers. You had strong triggers, and it pulled right back to the zone in the HVA. Those are your momentum trades, but the background is green. So when I teach this in the room, I try to encourage you guys to remember that this is such a slow moving chart with 15 minutes that background color is deceiving. That the large triggers, I still don't think they're necessary personally, but my brother likes them for that overall trend, so he keeps them in there. But look at Paul's chart. Paul took them off, and Paul said, I'm just going to use a black background, and I'm going to focus on what those small triggers are telling me. So does that make sense, Bank Vault? The small triggers are going to give you that read, and gold was an awesome example. It was still green, but it was coming from a termination. Where was that termination? It was right there. Everything rolls. It pulls back to the HVA. That's your HVA trade. That's what started the move down. Trouble makes it dance, then it breaks. So it takes a while. It takes a while for that transition to happen, but your small triggers can tell you the story faster. K price. All right. So why? I like the exclamation point. So K, check it out. And you guys have heard me say this. If you write the Y's on the chart, guys, it does two things for me. The first thing is Mark can see what I saw and fix any read that needs fixing. Does that make sense, guys? The whole goal is to become a chart reader. So if you tell me what you saw and you saw it wrong, I'll fix it. I'll help you fix it. The second thing is that you're writing a recipe for success. And I'm going to show you exactly what I mean. So the large chart read, K price, is smalls are down, strong side of smalls, nothing in the way. I'm sure that's exactly what you saw too, right? Smalls down, strong side of the smalls, nothing in the way. So instead of I got here at the pullback, let's try this language. With strong triggers, sold the zone to go down with the large chart. Momentum trade. Absolutely beautiful. Took profit here. And why? So let's try this. Exited at trouble, right? Is that fair? Exited at trouble. I recognized where the market was likely to bounce, therefore I got paid there. That's my job as a trader. But it could have taken the profit at 500. But I was nervous. So, K Price, what made you nervous? Was it the zone that already held and created a bounce? Going back into the zone with weak triggers? That's beautiful management, K Price. That is perfect management. You gave it a chance to break because of momentum. And then when it retested with weakness, you got paid. So maybe you say, with momentum into the area I held, when it retested with weakness, I took profits and will wait for next chance. Are you with me in here, K Price? You're really, really quiet. I love everything about this trade. But now instead of I got in on the pullback, what did we do? We said, this is what the large chart told me, and because of the large chart, this is what I waited for entry. So now you could do this every time this recipe was met. This is consistency. And I love that you managed it this way. And if you put your management into words, what you've done is you've started the beginning of your management plan. And it was great. When you retest with weakness, get paid, K Price. 225, do that 3 times a day. It is sunshine, rainbows, and ice cream on the boardwalk. Great trade. Absolutely great trade. But does it make sense on the annotation? And I know some of you guys are like, Mark, I just don't want to annotate like that. Or maybe some of you are like, I don't really know why I did it. And we'll do it together like this. But the more thorough you are in the beginning, no, you're doing great. Just the whole thing with annotation. Ask yourself why, right? What did I see that made me want to get in this trade? And sometimes it's rules, sometimes it's not. But what you can do, guys, is you can go through your thought process. What was I thinking in the moment that made me pull the trigger? And what did I see in the moment? I see the termination, and I've got strong triggers down. But since there was something in the way, I chose not to enter the trade. And you could even do it like that. And guys, look at this zone. See that tail? They tried to break it and failed. They tried to break it and failed 3 more times. That's their 5th effort to break it and failing. So TradingView users, is it safe to say that to feel good about a short trade, I want it to be below this trouble spot? Does that make sense, everybody? And until they get below that trouble spot, I'm not going to look for the short into it. I'm cool even if it goes down without me. Because if they break below it and I get strong triggers on this chart, I'll just sell that zone to go down with it. Transition to the weak side. Just no reason to take the long, guys. We already hit trouble. See how slow it is to move, though? That's why we let this. Everything is down. Large is down. Nothing above. 1-to-1s. Sometimes there's just no trade. And that aggravates all of us. Sometimes there's just no trade. Now I've got momentum. I've got no triggers through support, ladies and gentlemen. I can say to myself, they're pushing, they're leaning, they're trying, but until I get the potential to break, so there's 2 triggers through with momentum. If I get a pullback without divergence, I can pinpoint precisely where the market is most likely to bounce to trade with the potential. But the KISS plan for me says 3 triggers through, and I'm only allowed to pull the trigger in this room if the KISS plan is met. And the KISS plan says, without question, 3 of 4 trigger lines through the area. It's creating patience in me, guys, because 3 out of 4 trigger lines optimizes my chances of success. And guys, confidence comes from the memory of success. You guys want to watch S&P and see if it sets up? Can we do a quick run around the block? NASDAQ, all the way down to trouble and weakening triggers. Crude oil, 3 triggers through, odds favorable momentum, no divergence. Can we sell the pullback to the area inside of triggers? Do you guys see it? 3 triggers through, odds favorable momentum, no divergence, pulls back to the area. 1, 2, 3, 4, 5 ticks above the triggers where the market shouldn't go. My rules say if divergence prints, I'll have to exit the trade. If I get stopped out, I'm out of the trade. If I get a reversal bar, the KISS plan says put your stop behind the reversal bar. Does it fit the plan? That's all I care about. Let's find out. 3 of 4 triggers through from a strong top or bottom. Strong triggers on both. No divergence. The one thing that I didn't really have, well, strong triggers were iffy. Guys, we're going to let it play out. Win, lose, or draw. So now we're going to go into the KISS plan management. If I get a reversal bar in the direction of my trade, I'll reduce risk behind that reversal bar. If it hits my first target, I'll go to break even. And then once I'm at break even, if I get to that point, there is absolutely nothing for me to do until it either stops me out or hits the second target. Because the small triggers are riding the large triggers, it was a riskier trade. Hold on, let's make this. Are we talking about right there? Or are we talking about over here? Smalls are below the large. They're not below the synthetics, but they are below the large. Do you see that? At the time of the pullback. It's not the best look, but it fits the bill. And it's just the potential to break, right? So it's either going to break or it's not. But this is a good way, guys, if you just stick with the language and try not to overthink it. They were outside of the large. Doesn't guarantee a winner. Doesn't assure you that the areas will break. But what it does is it gets you focused on following a checklist. It gets you focused on just being okay with no matter what happens. Does TV platform have anything that represents synthetics? The trigger lines, Todd? The large trigger lines? The answer is no, because Todd, it's a completely different methodology. It's a completely different methodology. These synthetics are designed to increase accuracy in Renko bar trend trades because price returns to the large triggers. It's too different on the other platform. Does the crude oil blue fib on the 13.2 bar our blue at 63.89? Does the color of the bar matter? Is that what you're asking, Jerry? It doesn't. Triggers tell the story. Watch this, Jerry. You'll dig this. What color's the fib now? And what do the triggers say? What color's the one-to-ones? And what do the triggers say? Guys, triggers tell the story. There's a million ways to overthink the software. There's a million ways to overthink the software. Where you start saying things like, oh, well, because the small triggers turned against me, I can't take a trade. Because there was a one-to-one on my small chart, I can't take a trade, right? Go with the big picture. And it's so important, guys. It is so important, especially as a new user, that you don't start creating your own version of the rules, that you keep it very simple. Whoops, there's our reversal bar. 2 ticks above the reversal bar. Keep it very basic, guys, very focused. Don't insert your opinion. 38, we were into 88, so $100 will be at 78. We've only got 6 ticks of risk on the trade. It's either going to hit it or it's not. Does everybody notice how the large chart didn't blink? It's still strong triggers down. It's still 3 triggers through. Nothing changed on the large chart. It's scrambled on a small chart. I've got no divergence potential. I've still got strong triggers and the potential to break. I've got very little risk on the trade. I just need the sellers to show up and push. I need that momentum on the large chart to win. If it does, fantastic. If it doesn't, oh well. This is a trade that gives me an advantage. It gives me an edge. Are there any questions about what we're looking at right now? Why we did what we did? I didn't form an opinion. I'm not working off of hope or wish. What I'm doing is I'm saying, whoop, there's our first target. KISS plan says go break even. Let me make it so you guys can see the entries and exits. Hold on. Because of triggers, 3 triggers through, no divergence, smalls below the large, pull back to the area inside of triggers. We've already made $100. We have absolutely nothing to lose, ladies and gentlemen. This is what we talk about each and every morning. People ask me all the time, does the software really work? Does it really work? Do you handpick these things? Guys, I haven't handpicked anything. That is the same plan that I've been giving you guys for the last 5 years. Rules met, take the trade, get paid, cover your assets. And if we get stopped out, let's wait for the next trade. And if we don't get stopped out, well, then we're going to get paid. Any questions? Nothing to do on that one anymore, right? Only one line through support. Even though there's no divergence, guys, that's not my trade. It's directly into a termination. NASDAQ went from fib to divergence low. I don't have 3 triggers through. You'll notice the system did not create an entry signal. And we're still in it. Hey, John, have a good one, man. Have a good one. I'd love to see pictures from you. I say it every time you guys leave and don't post in my room. I'd love to see pictures of your charts. I'd love to see what you guys are doing. Whoops. You know what's cool? Is that if this one really runs, that's the next sign of trouble at 34. We're going to keep it at 68 because that's the KISS plan. Let's talk about what's still good in this trade, guys. Is the trend still down? Absolutely. Is the momentum still down? Absolutely. Is it still the potential to break? Absolutely. Nothing's changed on my large chart. What's changed on my small chart? Well, now my large are down, my smalls are down, my synthetics are down, my areas are down. Everything on every chart suggests that this market is more likely to go down than up. Because of my great entry, I've already been paid. I've got nothing to lose. Let's see if down wins. Hey, good morning, Miss Claire. Let's see what you did. Can you assist the read at the HVAs? I'll make a deal with you, Claire. What did you see at the HVAs? And will you do me a favor? Can you stretch out a little bit? So the first one's at 1425. It's got to start with the large chart, right? So the large chart, smalls down, You were strong side of the smalls, and you had nothing in the way until those 1-to-1s at the zone. Did you see the same thing, Miss Claire? Or did you see something that I didn't? So the rules in this look for using those HVAs, if I have strong triggers, room to profits, sell the HVA. All right, so that's the rules. Let's blow this up and look at your smaller chart. So there is a big ugly zone right there, right? Claire, did you see it? It's a zone. It's an HVA. A lot of things that could create a bounce right there. And what did it do? It created a bounce and it overran the HVA. Because there was no room between 64.14.25 and 16.14 flat. Do you see how there's just no room there to make any money? And I like to make money. So Claire, check this out. Back it up 4 bars. Boom, 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 boom. With the same large chart read, there's the same zone that creates a bounce, and it pulls right back to a zone with strong triggers. That's your momentum trade sell, Claire. Stop goes on the other side of the zone, and from 64.16, it rifles all the way down to 64.13, where you hit trouble. So this was your trade, and then because the HVA didn't have room, no trade on the HVA. And then here, as you pull back to the HVA, smalls below the large, they were still down on the pullback. You would sell 64.12 because it gives you room to 10, gives you $100 worth of profit to trouble. And then you have to make a management decision. Because the small triggers turn against you, they start to break above the large, not selling the HVA here. So if you took the first shot, the best shot, you had room to get to trouble. Uh-oh, hold on. Do you see how you already reached trouble? So this one would be trading directly into the trouble at 08 from 12. You'd want to manage that super assertively. Does that make sense? The first read, you have room to trouble. The second read, you've already reached trouble. Big difference. Do you see that? Does everybody see that? The first strong triggers pull back to the zone had all the room in the world. This one has already reached trouble. And you're starting to see the reaction and the fight right off of that key area. What did it end up doing? Let's take a look. Oh, look, guys, we made $300. How cool is that? And we bought the low tick. And then it pulled right back to a mid-band inside of triggers with strong triggers and a clear path. That's amazing. So, Claire, what did it do off of that zone? Well, it did push back down. There's our first one, and it pushes up. Not a good-looking trend trade. Outer band. Nothing for me to trade off of. Strong triggers. Pulls right back. Oh, that's crude. That's a different market. Strong triggers. Pulls back to the HVA. Continues down. Yours was the S&P, though, right? A little bit of sideways. Probably nothing to do directly into the zone. NASDAQ's into trouble coming from the zone. Crude oil can't seem to break it. Even gold says, I respect those zones. And look what happened. You guys that scrunch like this, and you're like, oh, look at all that stuff on my chart. I want to show you something. You don't really need more than that. And look at how much easier it is to read your trigger lines. Look at how much easier it is to recognize trouble. And even on this one, stretch it out, guys. Look how easy it is to read your triggers. Look how easy it is to see whether or not it reached an area. Make your charts legible. It still says down. We're still on the strong side of down. I've just got a bunch of nonsense in the way. All right, so let's look at our trade. And let's annotate. Did anybody else take this trade? Our large chart read. Oops, hold on one second. Snag it froze up. Did anybody take the short trade other than me? Trend is down. Strong triggers. 3 triggers through. So what does that say to me? That says potential to break. So be aware and make sure no divergence on the small chart. That's exactly what my rules say. So my small chart says no divergence. Small's below large. That's momentum. Pull back to an area inside triggers. It fit my plan, right? 100%. Straight out of the KISS plan. First target was 100. Second target was the low tick. And guys, that was a $300 trade. Per the plan, 100% rules. And then what happens? Small's below the large. But 3 triggers through. Turned into a clear path, didn't it? And then it pulled directly back to an area inside of triggers. Brian, did you check your messages? So when you put a ticket in with support, did you put it in on Discord? So I believe what Jason does is when you put a ticket in over here, what was your ticket number? Because he looks like he only has 2 left. There's a good chance that he reached out to you and you missed it. That seems to happen a lot. People put in the ticket and they don't catch the message. Are you 3293 or 3294 by any chance? Let's get you taken care of, though. Okay, so you're 92. So check your messages and see if he sent you a message in Discord. Because a lot of times he'll reach out, I believe, via Discord, because that's where the ticket is. And if he needs to get on your computer, that's where you guys will set up the log me in so that he can get on and take care of you. But there were probably quite a few in front of you. What was your challenge? Maybe I can help while we wait for Jason. Sometimes I can do the basic tech stuff. Opening a saved workspace on NinjaTrader or on TradingView. Cool. So a NinjaTrader, all of your workspaces that are saved are going to show up here. Do you not see it in the list? Is that the challenge? Okay, so when you open it up, so let's say you opened up crude oil, is a chart missing or are the indicators not working? Like maybe you open up, and I'll share one of my mistakes. And maybe that large chart just isn't even there. And I'm like, whoa, what am I supposed to do now? Is that what's going on? Or do you have a chart that has colors but no indicators? If you want to show me a picture of what you're looking at, I've probably screwed this up before and might have a fix. We'll just bypass Jason. I'm good on the basic tech stuff. Anything that requires more thought is certainly a Jason thing. I'm not 100% what a poor chart means, so I want to make sure that we had the right direction together. But I'm pretty good with NinjaTrader. You get a large chart with a white background and only price bars. Okay, and this is on every workspace or just one specific? The first thing I would do is I would try to reload the template. Have you done that one? Where you right click to templates and hit load and put that 13.2 back on? That's okay. So does your small chart come up okay? Just the large chart doesn't? So there may be something corrupt in the large chart. We might have to build a new chart together, which will be fun. It's a great learning experience. No small chart, so you only have a large chart. Okay, so let's do this. On your large chart, let's try to reload the template. So there's nothing at all. Okay. Was it working earlier? Okay, so it hasn't worked at all this morning. Right on. Do me a favor. So let's go through it together real quick. On your large chart, right click, reload all historical data. Try that one for me and see if that fixes it. See how now I'm going to reload everything. And it's going to come back in and it's going to recalculate and it's just going to take that fresh data and go through and we'll see what it can do. So try that one first and let me know if that gives us a fix. And you are connected, yes? Now the large chart will not appear. Let's do this then. You want to have some fun? And guys, this is a good one to learn if you're on NinjaTrader anyway. Your workspace is open, right? But there's no charts anywhere? Okay. When you closed out, one of the things I did is I closed out with the red box. Not by closing here and saving, and that's okay if that happens. So let's do this together. Go new and chart. And let's see if we can build a large chart and see what happens with it. So under instrument, we're going to go crude oil 925. And under the template, we're going to go 13.2 dynamic Renko bar, 13.2 Renko bar chart. Let me know when you've gotten to this point. That's 99% of the fight on this one. Guys, these are good lessons for all of you that are using NinjaTrader. Sometimes something will go wrong. Usually it's an easy fix. I'm going to click tick replay. 13.2 Renko bar chart. So you'll have the whole list. It should be second from the top. And then body size is 13.2. New bar is 13. New bar is 2. And make sure that it is the Nexgen dynamic Renko. It should default there for you. And let me just put this picture in the room. And then once you do that, we're going to click OK. And it's just going to build a new chart is what it's going to do. And this is what we want to see if it comes up the correct way or not. If it does, we are solid, and we'll just build a small chart in it and go to town on it. If it doesn't, then I may have to have Jason check your file to make sure that nothing's violated. Did you change computers over the weekend? Did you change the time frame on your computer over the weekend? We want to make sure there's not a security violation. Let me know if that comes up for you. I'm going to look at TradingView real quick while we do it. Gold hasn't been able to break. You got that? Did it work? So it worked? Heck yeah, look at me, the tech guy, Brian. Hey, Trade Smart. Nice to see you in here. So there's your large chart. So now let's build a small chart on the same workplace, Brian. We'll go new chart, still crude, right? But this time, you want it with market flow? No worries. So this time on the template, you're going to go Nexgen 5.1 Renko bar chart with market flow overlay. And I'm not 100% sure it's going to let us do it, but we're going to try it. I may need to get a workspace from John Novak. So there's 5.1, and we have to have tick replay. But down here, you're going to go 5.1 with market flow overlay. And I'm not sure it's going to let us. And it won't let me do it because it takes 2 data series. So you have to reconfigure your chart. Well, if it makes the chart, it'll get the buy and sell buttons. The thing is I don't know how to reconfigure it for market flow because I've never done it. So light fast. I'm looking to see if there's one that has it already built in it. Okay, you don't want the market flow. No worries. Then just build the chart the same way. And then to get the buttons up, the buy and sell buttons, it's this bad boy right here. This little icon looks like 2 boxes coming off of a big rectangle. That's your chart trader. You can turn it off and make it go completely away. You can have it where it's visible, or you can have it on but hidden. And that's the one when you click chart trader, that'll pull that up for you. So when I click chart trader, it sets me up there. That should get you going. This is what the classroom's for, guys. Always ask. You're welcome. I'm glad that that worked out. Glad that that worked out. And now when Jason reaches out, just be like, I don't need you. Mark's brilliant. Coming for your job, Jason Sager. Not really. Jason's freaking amazing. I've known Jason like 20 years. Does everybody see that the termination condition worked? Again, 60% of the time it works every time, ladies and gentlemen. And you'll notice that even the automated didn't set anything up until odds favorable momentum, 3 triggers through, and it's waiting for a pullback. How cool is that? That's what we teach every day. Do you guys see it? Are you stoked? Are you excited? You should be excited. That one ended up working. Might have tapped you out. Might have got you. Terminations for the win. All right, guys, I'm going to go stretch my legs again. Do you guys want to watch the automated and see what it does? It doesn't guarantee winners, but does everybody see the recipe? Strong triggers, 3 triggers through. You guys get to learn it with this very simple look. John Novak and I had to get it automated and go through every different thing that you think about. that can be summed up in 3 simple rules. Momentum, path, and entry, guys. Momentum, path, and entry. What's TradingView say? TradingView. Ah, get up there. TradingView. Where's my TradingView? There it is. Why is that not working? It's only NinjaTrader, Todd. It is only NinjaTrader. When we started the automation process, John told me, he goes, let's see if we can automate. And John has sworn over the years he'd never do an automated system. He goes, let's see if we can just automate the highest probability trend trade. It's been in process. John's been working. I don't know if there will be one on TV. John's been working with a programmer for 6 or 7 months. I've been working with John for the same 6 or 7 months. I probably have 10,000 pictures, maybe not, but probably 1,000 pictures of us going through and tweaking and what about this and what about that. And all it is it's taking the guesswork out of knowing whether or not your rules are met. That's it. That's all it is. This says triggers down, but it's above trouble. Strong triggers. If you're taking the long, you've got a little bit of trouble in the way, right? If you're taking the long, you could have seen the trouble. But look at the momentum. Look at the path. Pretty cool. Maybe one day there'll be a TradingView one. I don't know. But guys, everything that is described there is this. Oh, Paul, you got to tell me that, man. A lot of the times I can just reboot my audio and it fixes it. But if I don't know, I'll do that. I'm going to take 2 or 3 minutes and I'll reboot my audio on the way back and come back in. So I'll be back in just a few minutes, guys. Guys, it almost works better. And Bank Vault, if you have a question about a chart, one of the things that helps me a lot, use arrows. Like point my attention to where your question is. Let me know where it's at and just write it on the chart. Hey, Mark, why do birds suddenly appear? Right? But that's okay. What's your question on the chart? Let's get the answers to you. Can you guys hear me okay? Everybody good? Got it? Brian, can you hear me? Guys, give me a Y if you can hear me. No, I'm getting nervous. Okay, cool. He says, talk to me, Bank Vault. What can I do for you? In the main chart, red area. Is this the, oh, minute chart. What does that green arrow mean right there? So market flow, Bank Vault, was initially something that was for the Renko bar charts. So if you found yourself in a position on your Renko bar charts where maybe you had momentum and only the potential to break, Bank Vault, and you're like, okay, I'll take this trend trade with just a skosh more confirmation. You could go to the third chart, which was a range bar chart, and if you got a market flow signal at the area with the rules met, that green arrow was your confirmation. That was your up bar. You're good now, Brian? Awesome. So if there's no rules met, it means absolutely nothing. It's something that shows up on market flow, but it was designed to be used with the Renko charts. Now we use the white bars because they produce the HVAs, and that's what we're really using market flow on TradingView, is to create that HVA line so that you can buy it with odds favorable momentum. The green arrow, when you get a down bar followed by an up bar, it'll create that arrow. Or if you get an up bar or an up breakout bar followed by a down bar, it'll create that arrow. Does that make sense? On TradingView, you're just not going to use it. On NinjaTrader, it was something that you could use for a little extra confirmation when you pulled back to the area because maybe the entry wasn't perfect. Did that help? You're welcome. Good question. Miss Kathy, so a trade is momentum plus an area or plus clear path as entry. Would this be a trade? Are you going up or down, Miss Kathy? 66.6. Something looks odd on your chart. 64.3, 64.3. Miss Kathy, I'm going to say something is afoot with your chart. Because at 66.6, with this look on your chart, you shouldn't have your large triggers down. Your small triggers shouldn't be down at that point. They shouldn't be all the way down here. So I'm not sure where your triggers have come from. Does that make sense? Your small chart is cheating you out of the right information in this picture. So let's go to your small chart. Whoops, there we go. And do me a favor, right click on it and go to templates And let's make sure that it's the 5-1 Renko bar chart template. I'm not sure what template is working on that chart, but it's definitely not. Maybe it's the NASDAQ one, possibly. Maybe you put the NASDAQ one on the, but that 5-1 Renko bar chart, see how, and this will just be a good example. That's kind of your look right there, right? That we just saw on the gold chart. Look at what my small chart looks like with that look on the large chart. Does that make sense? The synthetics are up, the large are up, the smalls are above. And when I look at yours, something's wonky there. So I would reload that template. I would reload that template and see if we can't get it right. But to back up, with all of that momentum, with nothing in the way, I would say absolutely without question, that would have been a trend trade. If you got that pullback to the area inside of triggers, absolutely that would have been a trend trade with a correct template. Does that make sense? Does that help? And if it ever doesn't feel right, guys, if you're like, man, this isn't the normal look, send me a picture or reload templates. But yeah, look at your large chart. It's perfect. And there's no doubt in my mind that your small chart looks something just like this, which would have been ideal for that trend trade. Nice job. Nowhere to go. Sure hope support holds. Only one trigger through. Strong triggers. It's pulling back to a mid band, but terminations. It was gold. Just looking around, ran across it. Yeah, something was wonky. Guys, gold moves a lot. One of the things that I've noticed about gold, though, is that gold tends to overrun areas a lot, which makes it a little difficult. I love this. Nowhere to go. Just nowhere to go. I was talking to someone last week, and we put a big box around that zone and the large triggers down and said, that's where XRP is going to struggle. And sure enough, that's exactly where XRP struggled. So whether you guys are using crypto or whatever, Todd, let's look at Bitcoin. Did you guys know that it doesn't matter what you're trading? When the mid band holds, when the smalls get above the large, if I had an HVA there, that would have been a long trade. Into the zones, pulls right back to the one-to-ones, closes on the correct side. Might have been a good opportunity for more up to get to the bottom of the zone. At 9:41, I may have missed it, Miss Kathy. I apologize. Let me go get it. Guys, don't ever let me get away with not looking at your trades. If I do it, it's an accident, 100%. It's never on purpose. 9:40. I go from 9:14, 9:26, 9:33, 9:40. Miss Kathy, I don't see. I've got Rick's at 9:47. I don't see one from you at 9:41. Would you mind reposting it for me? And if you'll repost it for me, we'll take a look at it. From the termination, they're trying to go up. Support with all the triggers above. Ooh, that worked. All right, let's see what you did. All right, a trade is momentum, a clear path, and an entry area. So high probability trend trade. Momentum down. Separation, all triggers, clear. Only red fib in target area. First target reached, trailed stop, stopped out second with divergence. Awesome. So let's talk about your clear path. That would be the one that I'd want to address. These one-to-ones, Kathy, negate your clear path. So your clear path becomes potential to break. Does that make sense? Because you have two triggers below, but you've still got two triggers above. So it's not a clear path. It is the potential to break. So the fact that you took an exit with the second divergence is brilliant. Does that make sense? 2 through, you took your entry, and let's go back to it, crude oil, because I believe that's the one that we took live as well. So you got the first entry, and then when that second higher divergence printed, you took an exit, right? And then when it came back and presented itself with no divergence, there's your next shot. And that one had 3 triggers through and no divergence, and that was a much easier short. Does that make sense? Great trade. Nice management. Did you find a way to make a little money before it turned against you, or were you out break even? Divergence on the potential to break is something to keep eyes on. So the fact that you were able to manage, make some money, and get out when things changed, beautiful management on an awesome trade, Miss Kathy. And then with a little bit, because you were like doing the yay me, dancing around, feeling good, high-fiving. But that was your $300 trade. So that's a $400 moment over the course of about 30 minutes. Good stuff. Great trading. Great trading. Terminations for the win. Can't stress that enough. Terminations for the win. Trying to find out why your in and outs weren't. Are they not showing? So right click on your small chart, Kathy, and go to data series. Scroll it all the way to the bottom and make sure that it says text and marker here. If you reload a template, sometimes that'll go away and you just have to set it back up. So right click, data series, and scroll to the bottom and make sure that it says text and marker, and you'll be just fine. So if it's not on, watch what happens when I uncheck it. If I put do not plot, those go away. And then if I put text and marker, even historically, it'll go back and put those in for me. How are we doing today, guys? So we've seen, can I share that? Of course. Let's do it in 2 parts so that you get the full picture. Just so that you know that it's data series. And then from data series, there you go. I love sharing all the pictures, guys. What I find is that, I mean, I've got, where are we at for the year? I like checking the count. I'm at 6,478 pictures this week, or this year so far, guys. There is something that happens when you type on a chart, and I'm going to show you what I mean. If you just take a picture, no matter what you're doing, and if you draw an arrow right there and just do a call out, all caps. And you take the time to look at this picture and type out price reached resistance, triggers remained below. This is a termination condition. No trades into the area. Now I want you to see what happens, guys. My eyeballs saw what happened, and now my fingertips gave my brain something to think about every time I see this. These are the pictures that if you share them to screencast and you go to that tracking sheet to the basic rules, you can add that one to the termination conditions. But there's a very real neurological connection between what you type on a chart and what your eyes are seeing. So if you look at strong triggers, a picture of strong triggers, and you take the time to type out smalls are green, large are green, background is green, smalls above large, both wide and up, space between strong triggers, odds favorable, rule number 1 met. Does anybody believe that they could draw that arrow and type this description and ever make a mistake on strong triggers after 25, 30 times? I don't believe you can. And I think the same is true. Clear path. What's it look like? When the small and large triggers get past the area that was a termination, it's now broken. The path is clear. Rule number 2 is met. With odds favorable momentum, I'll look for my entry. That's exactly what it looks like. And then there's that refresher on terminations. So go take 30 pictures of this. And then, Kathy, I hate to put you on the spot. You'll never tell me that you have a clear path when you really don't. And the only reason I do that, the only reason I think you guys should be focused on this is because when you know what you're up against, you know how you need to manage it. So if you say I've got momentum and no clear path, you instantly say this is medium probability. And because it's medium probability, I'm going to manage a little more assertively. And that's exactly what you did, Miss Kathy. You managed a little more assertively with the second divergence because it wasn't perfect, which is textbook on the chart reading. So annotate, guys. Type, 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 type. The more you type, the easier life becomes. Looks like we took the loser. We sure did. Didn't go, huh? Happens sometimes. Great looking trades fail all the time, guys. Horrible looking trades win all the time. The key is to have an edge from start to finish. Where is my advantage? What does it come from? Well, on TV, this is my edge look, right? On KISS or on Ninja Trader, this is what gives me my edge. So I just commit to it all day, every day, same thing, over and over. Rinse and repeat. Are you guys familiar with Mark Douglas? Let me share this real quick. Mark Douglas, the late Mark Douglas, rest in peace. He and John Novak worked a lot in the 90s, talked once a week for like a year. And a lot of the education that we teach in this room is derivative of Mark Douglas's just overwhelming knowledge. And this is one of the most impactful phrases that I've ever heard. When you stop worrying, stop expecting to win every trade, you'll start winning most of your trades. When you stop caring about the result, but you focus on the execution of the method, ladies and gentlemen, it's the execution of the method that creates the results. It's the momentum and the clear path. It's the pull back to an area inside of triggers. It's the pattern. The pattern creates the edge. NASDAQ over here, it wants to go down from that termination condition, but it's got to get below this midband. It's got to get below this trouble to feel good about the trade. S&P, kind of in the same stage. Smalls are down, but it's on the weak side. It's pulling back into trouble, and there's no entry on the 1 minute. The process says that I have nothing to do. Smalls are up, coming from the termination, directly into zones. And look how the zone's held, guys. And you see it as the outer band on the small chart. Not taking a trend trade, directly into trouble. So the more you learn your plan, oh, look at this. Coming from the zone, weak side of the smalls, pulled back to the mid band. I wonder if it'll get us a close above to continue up from trouble. You guys want to see if it does? This zone is the challenge, though. My counter says 8 seconds, 7 seconds, 5 seconds. Whoops. There's my close above. If I bought the market, my stop has to go below the pivot. Profit targets would have to go at trend trades. Doesn't guarantee a winner, but my smalls are up. I'm strong side of the small. I've got room. I got to close on the correct side of the triggers. My stop is where the market should not go. Do you guys see how I followed my plan? I'll show you a trick. Go to more settings and go to trading and move your stuff to the center, and you'll be able to see what you're doing. So if we said, let's see if the trend trade runs to the zone, right? And then Mike M, if you wanted to say, yeah, but I see trouble, I'll sell one halfway up and try and get paid. Up bar, another close above. If it's going to win, you could go a couple ticks behind it. Got 13 ticks on a 4 lot. $130 per contract. Smalls are up. Trend is up. Strong side of the small. Because everything was down, it had to pull back to the mid band. Enter on the close above. If you wanted to take half off, whoops, at an HVA, get paid at the first sign of trouble. Does this make sense, everybody? Smalls are up, strong side of the small. Because the small triggers are against me, I don't just jump into the market. It's a close on the correct side that gets me in. But can you guys see the problems that are here? The zone, the HVA. It doesn't mean that there's not a trade. It means that I'm not going to risk $1,000 hoping that they break. Now my small triggers are rolling up. It's kind of fun, isn't it? Should we take 2 off at the HVA? Because an HVA with strong triggers can be detrimental, right? Missed us by a tick. Come on. There's your first contract. I'll take 2 off there. And now that I'm into trouble, I'll move my stop behind the zone, right? And then we'll put one more sell up here on my small chart trouble. Tell you what, I've got nothing to lose. I've got up strong, nothing in the way. First target at trouble, second target, let's see if it's a home run. Are there any questions about this trend trade, guys? It fits the rules. Large chart says small triggers up. Large chart, small triggers are strong. Because the large chart had the triggers down, the entry is a close on the correct side of the triggers. I identified trouble. I got paid at it, 2 contracts. I've got nothing to lose. And I've got no reason to believe this market isn't more likely to go up than down. So this is your trend trade, guys. With the trend, with the momentum from the area, close on the correct side. I like it when these set up live. Does it guarantee a winner? Absolutely not. Is it a hell of a good look? Absolutely it is. Any questions about what we just witnessed? And that was a 4 lot, guys, and I already made 200 in the bank. So I've already been paid. I've got nothing to lose. My worst case scenario is $200 on this trade. If you're the nervous sort, sell another one, right? Get out of everything. Make it a runner. I've got nothing to lose. I've taken 3 contracts off. I don't know where we're at. We've already made 380. And guys, there's nothing in the way. Do you see it? It is a football field worth a good time. So this is how we'll end class today, guys. We will end it with this trade. We'll see what happens. Do you guys want home run trade? Or do you want small chart problem, get paid, and wait for the next trade? Let's do small chart. Because that's still $350 on the final contract. I've got strong triggers. I've got an HVA. Isn't there something that says with strong triggers and a pullback to the HVA by the HVA? That's your momentum trade, guys. If the trend trade has fluctuations, that's the best spot for a bounce. And I've pretty much guaranteed it won't happen because I put an entry there. If this creates an up bar, there it is. That is a great spot. Reduce risk behind it, right? Got $100 locked in. I've had a pivot. It went up, it went down. So now it either continues up or it takes me out and I wait for the next trade. Anybody bummed about a $500 trade? It's 11:51 in the morning, guys. I'm going fishing. Oh, that needs to be at the bottom of the zone. There we go. 32 ticks. Any questions? Do I sound super calm when I do this? Have you guys ever noticed that? That I don't seem stressed? It's because I know the rules. Once you know your rules, once you've practiced them, once you learn to trust them, guys, trading becomes effortless. You realize that you're not in control, but that there's a look, there's a pattern that creates an edge. And that edge revolves around momentum. And look at that, they got rid of my zone. So let's put it up at the zone. Are there any questions? I'm going to leave YouTube running because I love a trade where we make a bunch of money live in front of everybody with the indicators that you're evaluating that fits a plan, that fits a concrete, solid plan that's handed to you every day. All you have to do is learn how to swing that hammer, guys. It's the greatest tool ever. Learn how to use it. And if you're not sure, you guys realize that there's live education, right? 5 days every week. All you have to do is ask, hey, Mark, I don't understand this. Give me some clarity. Hey, Mark, that doesn't make sense. Help me out. So nothing to do until I get another pivot. And I'll move a stop behind another pivot. Hopefully it just straight lines and hits my target. But we've already captured 380 and we're up 250. Some of you could just hit close and call it a day. It's an educational room. I want to see if it makes that zone. I want to see if there's something to strong triggers and a clear path. I feel like there might be. There's 310. Go cat go. Can you guys still hear me? Are you just awestruck and stunned? Nothing to type? I love it. I get cocky, guys. I do, because it's fun for me. I know it works. I've studied it. I've taken thousands of pictures. You just have to learn how to work it, guys. That's it. That's what I'm here for. My job is to teach you how to read the indicators so you can make that decision, so you can take this trade, so you can get paid at treble, so you can move stops behind targets, and you can do it all without me because you don't need me. The rules are there. You just have to learn the rules. We'll see what happens.